Hello everyone, welcome back to my channel, and today I'll be talking about how you should invest in a best, I'll say very good strategy which you can follow, and it is a combination of debt and equity. I think it's a unique style because it will safely help you to achieve your long-term goals. So let's begin. And before starting, I will request you to subscribe to my channel if you have not subscribed before. And so let's begin. So what exactly is this strategy? So this strategy actually talks about investing in debt in lump sum amount as well as allocating the yields of debt into equity in a systematic way. So the debt can be in a form of investing in fixed deposits, liquid funds, or even tax-free bonds. And the equity will be in a form of like investing in a mutual fund. It can be either large cap, mid cap, small cap, or even multi cap funds. It should be equity oriented diversified funds, and the time horizon should be at least and the risk appetite should be at least taken into consideration before allocating your investment in this. And eventually this strategy will help you to beat your inflation in a long term horizon, and will also help you to achieve the capital protection of the invested amount. So before telling you how this exactly works, why is this strategy actually needed? So there are many kind of investors in India who actually don't want volatility in their investments. They either want a very steady kind of a return, or either they want very high volatility. And there are a lot of people who are okay with little bit of volatility but not significant, that your capital will be lost, or you will be significantly having a very high volatility. So this strategy is good for those kind of investors. Secondly, this will significantly reduce the chances of negative returns, as I earlier told that your capital protection will be always there. And the also strategy need is like if someone is looking for a little bit of steady kind of returns, this method will be very good for them. And since it's allocation of debt and equity both, proper asset allocation is possible if we go by this strategy. So now the question is like how to do this strategy, how one can actually perform this strategy in their investments. So now to begin with, you have to first invest a lump sum amount, a significant lump sum amount in either debt related products in terms of mutual funds, or debt related products which is like a guaranteed kind of a returns product. So it is like if you take something like a fixed deposit, or something like tax free bonds, or something like debt oriented liquid fund or short term fund, these will be the probable options for you in terms of allocating your debt portion in this. And your aim should be at least getting 7% post tax returns if it is possible. That will eventually help you to maximize your overall returns. And in this, you have to keep one thing in mind, that you have to choose a monthly dividend or monthly payout of interest options, because that eventually that money will be invested in the form of SIP into equity oriented mutual funds, so that only your yields which are generated, that is getting invested, your principal, which is the capital allocated, will remain same as it is. And eventually your goal should be that you should invest in a way that your net return post this split of equity and debt should be at least 11 to 12%. That will help you to achieve proper asset allocation, and also can achieve to so to a certain extent to reach to your goals. So to give you a proper example, I have taken an example that you are investing rupees 10 lakh rupees in a debt instrument which gives you 8% returns per annum. And let's say if it is like a fixed kind of guaranteed kind of investment, like fixed deposits, or something like tax-free bonds, something like non-convertible debentures, which assures that this will be the coupon rate. So I'm assuming that you are getting 8% per annum. It can be pre-tax, post-tax, depends upon your tax bracket, but let's assume that this is your post-tax interest rate. And if you're getting 8% per annum, that roughly comes out to 80,000 a year. And if I split that amount into a monthly yield kind of an option, that roughly comes to around 6,666 rupees per month. So now you should do that. Your 6,666 has to be invested in something like a blue chip fund, or a large cap oriented diversified fund, which has a potential to give at least 14 to 15% returns from a 10-year investment horizon. So eventually, if I take 14 to 15% compounded annual growth returns, this will grow your SIP investment of 6,666 per month of a 10-year horizon to roughly 18 lakhs 50,000. So now, if I back calculate the total invested amount and the total value I'm getting after end of 10 years, I see that I'm gaining rupees 18 lakh 50,000 in this scenario, because whatever amount I'm getting invested in my equity allocation, all are basically my capital gains, because that money I have derived from the gains of my debt investments. And if I do a back calculation in terms of the returns which I have generated in this scenario, this roughly comes out to around 11%. So this can be a little bit higher or lower based on your equity returns or even based on your tax returns. But this strategy actually eventually will help to get 2 to 3% more from your current debt investment returns. And many of us right now feel that even if I'm getting 10 to 11%, almost like near to a short kind of a return, I will basically prefer that investment option compared to any other investment option which has a volatility of, let's say, can go as high as 20% but can go as low as 5 to 6%. So in this way, I think it's a very good strategy. Plus, this guarantees your capital protection, because your 10 lakh will remain 10 lakh, because that amount is not getting utilized. Apart from, only the yields are getting utilized for generating maximum returns. So thank you for watching this video, and if you like this video, please hit the like button, and if you have any queries, hit down in the comment section, and subscribe to my channel for more such videos, and please share to your friends and family so that they can also get benefited with this. And lastly, if you have any queries, you can email us on investnivesh@gmail.com, or log on to our website, which is www.investnivesh.blogspot.in. Thank you.